This is going to be another video breaking down a trade that I took on Monday and how I lost the trade and reviewing my decision making. But yeah, where have I been? God, I've been doing an awful lot of shit that has probably been distracting me from the trading, to be honest, but it's time to reel it back in. About 2 minutes before this video, my chair broke. So if I fall backwards at any point in this video, don't ask any questions. But anyway, right, okay, let's get into this video. So what are we looking at today? I took a trade on Monday, my first trade on my new funded account. I want to break down why I took this trade, my decision making throughout the trade, where I went wrong because I actually lost the trade on Monday. And I'm hoping what this does is not only help me, but help you guys if you're in a similar situation or in a similar sort of trade setup, or you just want to see a guy lose trades, just to know that losing trades is real and it does happen. So yeah, let's get into it. Where are we at? We are at Monday morning, 6 a.m. UK time on the NASDAQ. What has happened over the weekend? Well, we've opened with a bit of a gap up here, which is actually becomes very, very, very relevant later on in the video or in this trade. We have also shot down pre-market Asia, continue to shoot down at pre-market Asia, and now we are just chopping sideways like the NASDAQ has done for about 3 weeks now. So I was expecting this thing to continue to chop for a little bit and then actually start to make its move. I've put in here something that I've been working on recently, a bit of candle range theory. So if we go into the 4-hour chart, which is where I mostly trade off of, I've marked out the previous candle lows to almost give me an indication of bias, right? So waiting for this 6 a.m. candle to print, I know that we've broken the low of the previous candle here, we've wicked the previous candle here, but we have actually closed above it, which is actually giving me a signal that price is going to go bullish in this next candle. I did not apply this candle range theory to this trade on Monday. I saw my bias for the week was bearish, or it was bullish, sorry, but with bearish manipulation on Monday, and so I was dead set on price going bearish without looking at what the actual candles are doing. So tip number one for anybody that is kind of trying to learn from this, look into your bias very closely, your long-term bias, but then your short-term bias for the day. Looking back at this now, and hindsight is always the fucking winner when it comes to trading, but looking back at this now, I should have been prepped for a bullish candle, and I wasn't. I was prepped for a bearish candle. So anyway, we open the 6 a.m. candle. We have a good period. So for any of you, oh my God, I've just absolutely yeeted my wall. For any of you that don't know, I am a power-free AMD ICT trader. So I am looking for a candle open at 6 a.m., sometimes at 10 a.m., mostly at 6 a.m. around the London Open. I am looking for a clear accumulation of price, which is actually what we had here. Usually based on my data for around the first kind of hour or so of the 6 a.m. candle until 7 a.m., which is when EU market opens. I'm then looking for some sort of pre-market or 7 a.m. manipulation move to a PD array or to a point of liquidity. So whether this is the Asia high or sweeping out this previous high here, or if there's kind of a fair value gap imbalance like there is here, sweeping out that. I'm looking for that sort of manipulation and then some sort of distribution back to the downside that's in line with my bias. I saw this candle, this big kind of big dick up candle at 6:45 as my manipulation leg because I was so set on a bearish bias. That is kind of one of the things that beginner traders fall into the trap of, is not being able to dynamically change your bias. Looking back at this again, if I could use something like a candle range theory, I wouldn't have made that decision. I would have said, okay, this is a move directly upwards. We're going to fill some of this imbalance higher up, like this market open gap. Therefore, this is not a trade setup that I will take. But as I'm still a beginner, I'm still very, very set on the bias that I set for the week, set for the day, and it does not change. And that's a bad thing to do as a beginner. You need to be dynamic. You need to be changing your bias when you see market conditions play out. So we've just had a manipulation leg, well, my perceived manipulation leg to an upside buy side liquidity point. This is a very weak level here. What my second mistake was I saw this manipulation leg, I saw this reversal candle happen here, and I went straight into the lower time frames without looking at the slightly higher time frame picture. So I went straight into the 1 minute chart here, which was another mistake that I made during this trade. I saw this big kind of rejection candle here at bang on market open, which is another thing ICT teaches around macros and market opens. These are very crucial times for the market to grab liquidity or hunt liquidity before moving down or rebalancing. So I saw that and got really excited and went, oh my God, this is the great time for a reversal. And then what did I do? I was, without thinking again about my bias, without thinking again about where this trade might actually be in the market and what imbalances, like I said, this market opening gap that we haven't hit yet. I completely forgot about all of that. And I looked straight for my entry model, which is a fair value gap over a market structure shift. I saw that candle close. I entered a short position. Stop loss at the highs. Lows down at Asia low for a 2RR. And this is where the trade went to shit. Because as you can see, we stopped out pretty much straight away. And where did price actually end up going? Right to that market opening gap. It was a quick loss. To be honest, it stung quite a bit because it was my first one on my new funded account. And it all led from reading my bias wrong and not paying enough attention to a shorter time frame bias, but really being influenced by the longer time frame bias too much. Going straight down into the lower time frames to look for an entry model before really evaluating where price actually was in the market. Because if I had zoomed out, I would have seen that this buy side liquidity level here to reach was so weak compared to this market opening gap point up here, or even just Asia highs. And lastly, I was too impatient. I tried to rush my entry model and got really influenced by there being a potential entry model. But yeah, that's how I lost. I think I lost $250 or so on my first funded trade. I was managing risk pretty well because it was my first one and I was absolutely shitting myself. So I hope you enjoyed this video. I'm going to do this type of content every funded account trade that I make, to one, be transparent, but two, hopefully this gives you some good insight if you're going through a losing streak or you're going through losing trades, on what might potentially be causing those losses and how you can prevent those in the future, and hopefully that we grow on this journey together. If this is something you like, please do subscribe below. And also I've got a Discord below full of beginner traders all on this journey of learning, losses, wins, celebrations, failures, all trying to grow together. So if that's something you're interested in, it's in the description below. Completely free, no payment to join, never will be. But yeah, I'm going to go to the beach now. So I will see you in the next one.